weird, but okay. So good morning, everyone. For those of you who don't know me, but most of you do, I'm Trisha Teague. I'm the CEO of the TREP School. Paula Young, who most of you already know, who works here at TREP, is also on the line. So if anybody has any technical issues with anything, although you shouldn't, you can, because you're already here, so that's a good thing. You can reach out to Paula. And our guest today is Mr. Greg Teague. Yes, he is a relative. No, he is not my father, because one of my other employees asked me that yesterday. He is actually my cousin. He's the second Teague accountant, for those of you who weren't here early enough to hear me make that joke. He has an accounting degree from Bradley University. He has held a number of the illustrious Bradley University, where we both went. He has had a number of accounting and CFO related positions. Currently is self-employed, working for himself, doing accounting as his business. And I will turn it over to, and he could tell you more about himself, which is in his presentation. And so I will turn it over to you, Mr. Teague.
All right, thank you. All right, let me welcome everyone. Today, principles, make sure everyone understands sort of the basics of how accounting works, and walk you through a little bit of Quickbooks so you understand how that can help you business, most widely used accounting software that people use. So let me start here by pulling up our presentation for today. I can get that. Okay. Started background information on me. Trisha mentioned that I have a accounting degree from Bradley University. I also have an MBA in accounting and finance from Roosevelt University. I've gone through several programs with the IRS, passed their gold agent exams. My company is called Practical Financial Solutions.
Greg, you are
Chicago, the pro advisor for QuickBooks.
Greg, you are freezing a lot, and I just confirmed with Paula that you're freezing for her too. So obviously that would mean you're freezing for everybody, because she and I are not in the same location.
Okay. See, man, because that's not a good thing, then.
Yes, especially since you're the person presenting.
Right. Let me do different. Yeah, there isn't a different connection that I can use. That is not.
You seem to be okay right now.
Okay, I'm not sure why.
He froze as soon as you said that.
I know.
Right, that's weird. And I'm the only person here in my house, so nobody else is using internet or anything. So I'm not sure what's going on. Okay. So let me go ahead and see if it changes at all, or try to see what's going on here. This is an interesting.
Yeah, stop. Yeah, that's a good idea. Alvarez just made a suggestion. Try to stop your video and just do this share screen, and sometimes that does help.
Say that again?
Turn off your video, but just share your screen. Sometimes that helps with the freezing.
Okay. Okay. All right. Maybe that'll help then. Okay.
Okay.
All right. So this is some interesting information I found that for people starting small businesses, 20% of new small businesses fail in the first year, 50% fail in the first 5 years. But the odds of being successful go up to 89%. An accounting professional, you follow their advice because they can help you stay out of trouble, help you keep your business finances organized, because a lot of people, when they start a business, they know the business they're in. They focus on generating sales or growing their business. We oftentimes don't from the end of the business, which is tracking exactly what's going on with your business and being able to make sure you're keeping good records, and several clients, even the bookkeeping side, even though I've been harping with them on, no, we need to get this on a regular monthly basis or a minimum quarterly, and they've been resistant and are behind filing them. And that is oftentimes on top of this, it becomes more of a hassle, and then you end up with a lot of issues with the IRS if you're not filing your time. So it's important to make sure you understand how to do that. You work with someone to make sure you know how to do that. Some basic journal to give you an idea of some very basic things with your business. For example, if you were using an accounting system, doesn't have to be QuickBooks, that's just one of the one of the better ones to use. Simple things like being able to record transactions properly within your business will help you long term. And I want to make sure people understand exactly how that works. So if you've never been an accountant, you may not understand the debits and credits. And I've had friends who took accounting classes who just said, I have no clue what any of that was. So I'm going to pay you to do this stuff for me, which is fine. But for basics of owning a business, you want to just some simple transactions that give you an idea of how these things work. For example, if you were recording a sales transaction, so I'm selling merchandise to someone, I'm collecting cash. So if you look at the first entry, cash, your checking account, $100 debits. I'm putting $100 into my checking account. The other side of the entry is I'm recording revenue, sales revenue. That's one entry generating $100 worth of sales. Paying an expense, like paying for maybe office supply. The second one is the debit would be an office expense. I'm paying for office expense, so the money is coming out of my checking account. So it's a credit out of my that. You want to just make sure you have an idea of how things work, because, and I'll talk about this a little bit more, when it comes to keeping track of your business, keeping your accounting system up to date, 80% of what you business is keeping track of the money, inflows and outflows of your business. You can keep track of the cash that's going on, all that difficult of it, depending on what type of business you have. That can be a bit more complex if you have an inventory system or
Hey, Greg, we're still having
hundreds of
problems.
sales every day. Complex.
Hey, Greg, we're still having problems even with audio. Hold on, let me see something.
Okay. Let me try one other thing here. Okay, is that any better?
We'll see, I guess.
Okay.
Is the
All
answer.
right, no problem. I've got two different wireless networks. I just logged into the other one and see if that one will work any better.
Okay.
Okay. All right, so go back to full screen. Okay, so the third entry there is, for example, if you were taking out a business loan for your business, of course, that's $10,000. A $10,000 loan would be cash going into your business. And then you're recording the fact that you owe money to that lender, to that bank. So it's a loan payable, as an example. Now we move on to the next set of entries. For example, if you were just starting up your business, if part of starting up your business, say it's an LLC or an S corporation, and you're making contributions, you're putting $5,000 in to start your business. So you would put $5,000 into the business account, and the other side of the entry would be the owner's equity or members' equity if you have an LLC. And then the last two, most people run a cash method for they're keeping their books. So whatever entries, whatever cash actually flows in and out of the business is what's recorded for that particular month. Some people choose to run the accrual method, which means whatever entries are recorded are what's on the book. So if I send out an invoice to someone for $1,200, that's my revenue, even though I haven't collected it yet. I've accrued that sales and that receivable. And then when I receive it, then I'm just, the flip side is I'm removing that receivable because I've received the cash. So in that example, those two entries there, if I'm sending someone an invoice for $1,200, the debit for that is accounts receivable. The credit is sales revenue. I'm recognizing the revenue when I send out the invoice. And then when I actually receive the payment, the $1,200 goes into cash, and then I'm basically removing the receivable because I've now received that money. So just some very basic entries. Now, so that's what's important, is to understand, have a good idea of how those things should be looking in your accounting system, whatever system you use. One of the nice things about QuickBooks is that it kind of automates all those things for you. What you want to try to do, most people have set up so that they've set up their bank accounts, and even if they have a business credit card, they set that up in QuickBooks so that QuickBooks can automatically pull all of those transactions in from your bank and your credit card company, so that all those entries are there. It's just a matter of either matching them up with what you've done in QuickBooks or making sure they're properly classified within QuickBooks. Some of the benefits for using the QuickBooks Online is the one that most people are using. It's actually the one that Intuit is actually pushing people to use. It's that the benefits are that it's a cloud-based system where you don't have to have any equipment of your own. You can use it on your computer, tablet, on your phone, whatever you want to use it on. All of the records are stored for you on their server. And so mobile, desktop apps, accessible wherever you are, doesn't matter what operating system, if you're on Windows or you're a Mac user, real-time access from anywhere. It's got really bank level security, so it's not accessible by outside parties. And there are tons of apps for different purposes. If you're looking to do specific things, there are oftentimes apps that interface with QuickBooks to allow you to do those things. So it's fairly easy to use. It's got a lot of features to it. The key is to work with someone that can help you figure out which of those you need. The basics we'll go through just so you understand there's a few different subscription levels. It's based on what you need. I'm not harping on any of this or saying, oh, you have to use QuickBooks, because I have people who don't use QuickBooks as well. But they have different platforms, different prices, so you can decide what works for you based on what you need. Okay. And I'm not harping on that at all. I'm not a person that says, oh, you have to use QuickBooks, because you don't, but it's a good tool if you want to use that. There are a lot of nice features if you go in. There's actually a test drive that I'll show you, give you a link for, if you want to go in and play around with it, because they have a sample company that you can use, and we'll actually walk through that a little bit to show you a little bit of that as well. So one of the keys to using QuickBooks is this black navigation bar on the side, which shows you how to do all the different things. There's the dashboard, which is sort of the overall, here's what's going on with your business. If you're, excuse me. If you're trying to create transactions, record expenses, invoices, everything is there on the left side to control exactly what you're able to do within QuickBooks. The expenses center, for instance, you can record an expense, something that you've already paid. What a lot of people do is use it to also keep track of what needs to be paid. For example, if I received invoices from people that I have to pay in the future, I can record them in QuickBooks. I can just enter those, enter the due date, and it will keep track of when they're due, so that I can just go in and pay them once they're due. If I'm writing checks or however you want to pay them electronically, but you decide when you pay them. That's one of the features a lot of people do use. Invoicing, of course, if I'm running my business, I need to be able to invoice my customers so I can collect payments. If I'm not, it depends on the type of business you have. If you have a service-oriented business, oftentimes you're invoicing customers, versus if I have a store, I'm not invoicing anyone. Typically, I am generating sales. Point of sale system is what they call. There's actually a different version that has a point of sale system. If you're doing that, if you have a store and people come in and buy things, of course, I'm not going to take the time to go in and create that in QuickBooks, but there's a separate system that interfaces that allows you to do that. But the key is I'm able to track all of those things and in this one system. So the cash that's going in and out of the business, if I'm generating a sale, sending an invoice, I can do that here. I can email the invoice, and it will notify me when that customer looks at the invoice, when they pay the invoice. So all that information is there and easy to track. It makes it easy to track the back end of your business so that you can focus more on growing your business. So that's the key for lots of people. It's a matter of showing them how to do this so that they don't have to spend a lot of time figuring out what's going on behind the scenes. Several clients who are really great at using QuickBooks, because they do. I have an attorney, as a matter of fact, that she does everything in QuickBooks. It took probably a year or two to get her on board with doing everything through QuickBooks, but now she says, "Oh, I love this. It's great." She can do payroll through there, invoice customers. She prints all of her checks through QuickBooks. I actually have another attorney who's just the opposite, that does nothing through QuickBooks. She just sends me all of her stuff and for me to do it. But it just depends on what you as a business owner want to do. You can either say, oh, I want to embrace it. I want to get to use it, learn how to use it, and do things, use it to do things, or you can pay someone to do it for you. But the key is that you make sure it's being done so that, you know, when it's time to file your taxes, you're not running around trying to find all the records. It's all here for you. You want to work with someone that can help you maximize the benefits of using this, talking about the different types of entity structures that help you minimize your tax liability, because that it can help you keep track of that within QuickBooks as well. All right. I mentioned keeping track of the cash. This is one of the most important parts of QuickBooks or any accounting system, is keeping track of what's going on with the cash in your business, the inflows and outflows of your business. And that's one of the great things that it can do. If you're linking your accounts with QuickBooks, it can literally download transactions on a daily basis from your bank, from your credit card company, so that all of the transactions are there. And if you look at, here it lists the 3 accounts that they have here. If you look at the information down below, these are the transactions that have been imported into QuickBooks. And this is sort of, it's kind of like a holding area. These are the transactions that have been pulled in that have not been added to your bank register within QuickBooks. And if you look at the top, for instance, for each account listed there are 2 different numbers. There's a bank balance and there's a QuickBook balance. And the reason it's different is because you have transactions that have not been added to QuickBooks yet, to your account, to your register in QuickBooks. So here's where it gives you, for example, there are transactions here. If you look at the first one, 5/25/2020, and it says uncategorized. That means, okay, QuickBooks couldn't recognize what expense category that goes into. So you can go in and say, oh, it goes into office supplies or whatever, and then add it so that it's updated. Now it's in your bank register. And the next one is Amazon. So I paid for some, I received money. Maybe I'm selling goods on Amazon. So that would be sales revenue. Okay, great. So that goes in that category, right? The next one there is, it's an expense for $82.45. And you look where it says match. What that tells me is in QuickBooks, there's a transaction for $82.45 already in QuickBooks. So if I've entered that payment already in QuickBooks, so when it downloads it from the bank, it's saying, oh, I found a transaction, tells me same date for the same amount. I can just click match and I'm done, because it's matched this transaction to what's already in QuickBooks. And hopefully that is what happens with a lot of the transactions. If you're using QuickBooks and you're entering them through QuickBooks, when you create a transaction, all you're doing is matching those transactions to what the bank is telling you has gone through your bank or credit card company. That's the ideal way. Everything that happens, if you're using it fully, you're entering all the transactions or having someone enter them for you as you go along. It's a matter of matching those. For my attorney that doesn't do that, well, she does have all of the transactions being pulled in from her bank. So that's good. It's then a matter of making sure they're all properly categorized, because she's not doing it. So she has to basically pay me to do that for her, to make sure it's in the right category and to reconcile, make sure the accounts match what's on her bank statements and credit card statements. All right.
Hey, Greg,
Yes.
did you want to do questions as we go through, or do you want to wait till the end?
No, we can stop for questions. Absolutely.
Okay, well, we have a question in the Q&A box. Is there a way to use one QuickBooks program for multiple businesses and personal finances as well?
You probably don't want to do that. It's not for personal finance. And what you're probably doing is setting up multiple accounts, and they actually have a way to do that within QuickBooks. I mean, it would be very complicated to try to set up multiple businesses within one QuickBooks account. I would tell you, you would set up a separate account for each business, because you should have a separate bank account, separate everything for each business. People get into lots of trouble or have lots of issues when you're, the term that is used is commingling assets. So you want to, one of the things I tell people all the time, separate you from your business. The whole purpose of an LLC or a corporation is to separate the business from you personally, because if someone sues your business for something that happened, if you don't have, if you're doing everything together, an attorney's just going to say, well, you're not, there's no separation here. You're doing everything together. So they're really, I could sue, I can claim, get access to all the assets there. Ideally, you want to separate you from your business. So if someone sues your business, they don't have access to any personal assets. It's very important. I've seen way too many people that are paying personal expenses out of their business accounts. You know, that is a no-no. That will get you into trouble every time. If you, it may not be an issue, but if you have someone that is going to be looking there, it's going to cause issues, because it's one of the things that a lot of attorneys, or even if you were dealing with someone with, say, the IRS or someone, that's one of the things they would look at. Let me see if I can grab this link, because I don't have it here.
And while you're grabbing that link, I would say that's what we have done. We actually have separate QuickBooks accounts. So I have 2 state contracts, and each one of those has separate QuickBooks accounts set up so that I can track them separately, even though we're operating out of one operational account. Then that way I can just separate expenses. And then the other thing that I do have a QuickBooks account for the business overall. But it makes things a lot easier to have them separate.
Right. Absolutely.
And then we also have another question, so I will clear this because it was already answered. And then, so even though QuickBooks is pulling transactions automatically, there's still an expectation for me as a manager to manually record transactions.
Yes, well, it depends on exactly how you want to use QuickBooks. Okay? As I mentioned, I've got like 2 attorneys that use it completely differently. So one does everything in QuickBooks because she wants to make sure it's all updated regularly. You know, she can look and see what's going on at any time. I've got another attorney who doesn't care at all about that. But transactions are being pulled in, but she's not entering anything herself in QuickBooks. So the only time it's updated is when I update it for her. So you have to decide what works best for you. I tell people, really, you want to make sure that your books, at a minimum quarterly, they're being updated. So what's in your QuickBooks matches, you know, what's happening in the bank. If you're not using it, if you're not entering the information yourself, if you're, you know, if you're doing everything online, all the transactions are happening online, you may not feel the need to enter them into QuickBooks because the information will be coming directly from your bank. If you're generating invoices from QuickBooks, that's already there. If you are say you set up payroll and you're running payroll through QuickBooks, that information is there. It's just the outside entries. If I am going in and generating transactions, if I'm sending money to people, if I'm collecting money from people, that's not going, it's not me invoicing and them paying the invoice, that information goes through the bank. That's going to be pulled directly from the bank. So if you're not entering those in QuickBooks, that's fine because it's being pulled from your bank. It's just a question of, again, how you want to do it. You don't have to enter everything, but some people would prefer to have their books updated every month so that they always know exactly what's going on.
And it's really, I think, and I'm thinking about that screen where it's like, the QuickBooks is matching records. Like QuickBooks is not going to know automatically. The first time something happens, QuickBooks is not going to know where to put it. Unless it comes with like a name that is common, like
right
here, Amarin, if you've got a power bill and it comes from Amarin, and if you're in Chicagoland, it would be ComEd. But if it's Amarin, okay, it would probably know where to put Amarin because it sees Amarin everywhere and know that that's not
right.
But if it's a bill that comes from Town Center, it would not know until the first time you put it in that, for me, that's rent. So then every time after that, when Town Center comes through from the bank account, it would know, oh yeah, that was rent. Mm-hmm. So there's some intelligence that has to happen because you got to make sure you put transactions in the right categories.
Correct. Absolutely.
Those were all questions that we had.
Okay. All right, so let's go to, I think we have the sample company up. You guys see that one?
Mm-hmm.
The Craig's Landscape Design and Landscape Services. All right, so this is a sample company within QuickBooks. So you can see kind of what it looks like. This is the workspace. When you're looking at what's happening here, the dashboard, it gives you some ideas of what happened. So in terms of there's money in. So here, the first one is add products and services. So when you're setting up your company, you're setting up, here's the products and services that I offer. You can create those so that then when I go to create an invoice, I'm just selecting which product or which service I'm providing to someone. Customers is those are the people that you're selling goods to. I can add, manage my customers. Create estimates is if I run like this is Craig's Design and Landscaping. So if someone says, here, I want you to do X, Y, and Z landscaping work for me, I can create an estimate for that and send it to the customer. Here's the estimate of the cost for the work that you want me to do. So we can send them the estimate. If they may want adjustments to it, and update the estimate. Once they accept it, I can then convert that estimate into an invoice. Great. Okay, here's your invoice for the work we're going to do. Or if it's for something, any other thing, I can just create an invoice. I can, if I click on send invoices, it's going to take me here to say, okay, great. Who's the customer? What's the email for the customer? What are the terms? What are the products and services? So it allows me to create that particular invoice. The reason I want to use this is because it's a sample, it's a working sample company. So if I'm going to send Diego a bill for doing, let's see here, what type of.
Greg, are you sharing we're still seeing the PowerPoint.
Okay. All right.
Yeah.
All right. That's okay. Let me do this then. Let me go back here. The
And then once you're done with your example from QuickBooks, I'm gonna go to the next question.
All right, now do you see the invoice?
Yep. Yep.
Okay. All right, so let me do this because yes, I would. Let me go back out here because this is what I thought you guys were seeing that. Okay, so this is the sample company, Craig's Design and Landscaping, as I talked about. These are the items here: add products and services, manage customers, create estimates, allow you to do that. I just clicked on the send invoices. And I'm going to create an invoice for Diego Rodriguez. So I'm going to send him an invoice for doing, I select the product and services. I'm going to do concrete work for him for a price of $2,500. You know, so it's as simple as, okay, great. I'm creating that invoice. I'm going to save and send the invoice to him. Okay, that generates the invoice for him. I can just send it and close it, so it'll save the invoice. And I don't think it will actually save and send it. Okay, yeah. So, but that's how you would send an invoice to someone. It's very simple. Once you've set up all your products and services and you set up your customers, or even if you were adding a new customer, you're generating those invoices. So now, as I talked about the journal entries, if I create that invoice and send it, the journal entry is created automatically. If Diego goes in and looks at it and says, oh, yep, that's fine, let me go and pay it, the journal entry for receiving the payment is done automatically. So, you know, I'm old school. The funny thing is, I was thinking about this the other day and realized that the very first accounting class I took was in 1980. Think about how long ago that was. It was a long time ago. So, and back then, yes, you were literally writing journal entries. And now, yes, you can do this where it's all visual. So great, I can create an invoice, boom, journal entry's done. Receive a payment, boom, journal entry's done. I don't have to record a journal entry. Those things are being done automatically for you. So that's the beauty of QuickBooks.
This is actually a good segue into the question.
Okay.
And it says, this is still a bit unclear. We are discussing QuickBooks functionality, but I'm concerned that what I need first is to understand the essentials of accounting, old school and 100% manual, before using a tool that automates steps. Could we cover the essential accounting tasks that a business owner needs to accomplish, regardless of what tools they use to do it? That will help me better understand what I need QuickBooks to do for me.
Yep, absolutely, absolutely. So remember, going back to the beginning, those journal entries, yes, it's all about primarily keeping track of your cash, because those are the journal entries. No matter what type of business you have, it's a matter of keeping track of what's happening with the cash in your business, because the only way you're succeeding in business is if you're collecting revenue for your business. So it's recording, whether it's invoicing a customer, collecting a payment, paying a bill, taking out a loan to get money into your business to generate, be able to go out and market and buy inventory, things like that. The journal entries I created are some of the very basic ones that everyone will need. So yeah, it will vary. The details for, you know, there can be a lot more different types of journal entries depending on the type of business. If you have a manufacturing business, you've got way more entries because you're looking at different products that you're purchasing to create your product that you're going to sell. If I'm buying different pieces to manufacture an item that I can then sell, it's a lot more complex because I have to keep track of the cost of all the goods that I've sold. What is the cost of me creating this item that I'm selling versus a service, even like Craig's Landscaping. He's got to buy the products that he's putting in, but he also has to pay laborers for payroll for them to go out and actually do the work and be able to estimate the number of hours it's going to take for someone to do that. So basically what I'm saying is what the entries you need will depend on the type of business you have. But what I've given you is sort of just very basic, because that's kind of what we talked about, is having some very basic, here's some of the basic understanding of how accounting works. And accounting is all about keeping track of the inflows and outflows of your business, the money you're receiving, the money you're spending, and keeping track of sort of where you are on the business.
Somebody asked, can we go switch to the screen to journal entries? I don't know, Shannon, if you mean the example journal entries that we started with in the beginning, just, or if you're talking about on QuickBooks. So can you type a clarification? Because I want to make sure I'm giving you what you're asking for. And I think that both are important, right? And I would say you probably would agree with that, Greg, that
Yeah, absolutely.
if we're looking at just journal entries from a general perspective, whether you're writing them out by hand or you're putting them in QuickBooks, like you need to be able, or any other accounting system, you need to be able to track everything that's going on.
Right.
Whatever I bought and whatever I bought, whatever I sold, and whatever transaction will eventually lead to cash.
Right. Absolutely.
So yeah, Greg, let's first go back to the journal entries at the beginning of your presentation, and then let's look at the journal entries in QuickBooks, because I think the two kind of go hand in hand, and I think that'll help people visualize.
Yep, absolutely. Okay. Okay. So yeah, let's go back to these, those journal entries. So again, these are just some of the basic ones. Like the first journal entry is a sale. So if I'm selling a product, I'm collecting cash that goes into my bank account. That's a debit to cash. I'm increasing my cash. The other side of that entry is recording the revenue that's being generated. Paying an expense is I'm reducing the cash, so the credit is cash. So I'm paying $250 for, say, office supplies or some other office-related expense. So the debit, it's a $250 for office expense, and then the credit is cash. I'm reducing my cash. If I'm
for those people who have never taken an accounting class, because I know somebody somewhere is going, what is a debit and what is a credit?
Right.
Even though they haven't typed the question yet. Can you explain a debit and credit? At least attempt to.
Right. All right. Some accounts have a normal debit balance and a credit balance. For example, if you were looking at it, and actually what I was going to do is go to some of the actual reports, but they're balance sheet accounts, which are all of your assets, your bank accounts, your receivables, your inventory, your fixed assets, whether it's if I buy a vehicle for use in my business, those are all assets. Those all have a debit balance. The credit side is anything I owe, so liabilities, so accounts payable, loans payable, and my business owner's equity are credits. So the way to think of it is they have to match. There is a debit and a credit for each transaction. If I'm debiting one, I've got to credit something else. So it's got double entry accounting, is understanding if I'm putting money into my cash account, great, where does that come from? What's the other side of the entry? The balance sheet, this tells me here's where I am right now. The other side, the other report is your operating statement or profit and loss statement, which is for the year. So if I'm on a calendar basis for the year of 2020, what's my revenue so far for the year and my expenses so far for the year? So the revenue is actually a normal credit balance. The expenses are normal debit balance. So it doesn't necessarily make sense that, just me telling you that, but
I have a quick question. Does
when you look at the reports, it'll make more sense.
I was gonna say, does the sample company have a balance sheet?
Yeah, absolutely.
Because I think that'll help it make more sense to people.
Yep. All right, so let's go. Let me do this. Let me go back to the, yep.
And then I'm looking for something that I shared in class with the last fast track class. For those of you who are in that class, you've already seen that. For those of you who weren't, this is kind of like a preview of one of the best descriptions of all of the accounting reports that come out.
Right.
It's on YouTube. So I'm looking for that link so I can put it in the chat.
Yeah. Okay.
Yeah.
All right. So when you go to reports, the balance sheet and the profit and loss are the two main reports that most people review. Unless you have, again, receivables, you want to see if I'm billing customers, I want to see who hasn't paid me, how long it's been since I've sent them a bill, whether they paid me or not. But the balance sheet shows your current financial position. So if I pull up a balance sheet for this company, it tells me this is where the company is for their assets and liabilities as of right at this moment. Now, let me do this. Let's go back to this. Let me pull up one for last year. So if I pull up last year, and let me start with the cash basis. So at the end of last year, here's where the business was. The business had $5,000. Apparently, they just started the business. So there's $5,000 in the bank account. The other side of that entry is opening balance equity. So what that tells me is the person started the business, they contributed $5,000 to the business. So $5,000 to put into the checking account. The other side of that entry is the owner's equity in this business. So the owner put $5,000 into that business. That's the journal. That would be the journal entry to put that in. 5,000 debit to checking, credit to owner's equity. So what you see here is the asset section, the first section, where it says total assets. That's the debit side of this report. The credit side is the liabilities and equity. Each report has a debit side and the credit side. Okay, those are the normal balances. That doesn't mean it cannot be a negative, but that's the normal balances. Now, if I go back to this report and say, okay, show me this report as of yesterday. So as of yesterday, here's what it looked like. So now they have 1201 in the checking account. They have a savings account now with 800 undeposited funds. What that means is they've received money, but have not yet put it into the bank account. So it's sort of a holding. I've recorded that sale, but the money is not yet reflected in this checking account balance. An asset, a fixed asset. So this person, the company bought a truck. So that's an asset that goes on the books here. The liability side is, well, I've spent money for expenses. I have a MasterCard. My MasterCard balance right now is $157.72. So that's money I owe to MasterCard. I have other liabilities. So I have a loan payable for $4,000, another payable for $209.90. I have a note payable. So I borrowed some other money from someone, maybe from a business owner or from someone else. So that tells me where my business is, and it tells me where am I equity wise. So this actually is a negative. What that is telling me is so far the business has actually lost money. It's not generated a profit yet. My equity is negative.
We have a question that relates to equity. Why isn't the owner's equity considered a debit for the business, since it is technically what the business owes to the owner?
It's, again, you just said it. It's what the business owes. Anything that the business owes is a credit. The note payable is a credit because the business owes money. Now, if I'm the owner, I view it as an asset because, you know, it's my money. The business views it as the business owes money to the owner. Again, it's one of the issues I see all the time with business owners. You are completely separate from the business. Okay? You view it as an asset, but that's you personally. The business owes money to you.
Right. I think that the reason why it's confusing for people is because in your normal everyday life, credit is good and debit is bad.
Mm.
Like when you look at your checking account.
Yeah, that's exactly where I was going, because that's what you've been taught in dealing with your bank. Yep. But here's what you have to understand, because you go to the bank, you put money into the bank says, okay, great, we'll credit your account. Again, you're looking at it the wrong way. The bank is telling you that we're going to credit your account. What does that mean? That means the bank owes you that money. It's the bank vernacular. They have a credit because they now owe that money to you.
So we've been trained in bank vernacular,
right,
as if it applies to us.
Correct. It applies to them.
It applies
right.
to them.
It right. applies to them. So when they debit your account, they're taking money out. That means they no longer owe it to you.
So the follow-up question is, a debit is an asset and a credit is a debt?
For the balance sheet, yeah, typically, yes, you will. No, that's not the way to look at it. Okay, they're assets and liabilities. Asset is something you owe, a liability is something you owe. Don't think of a debit as being one or the other, because to increase my assets, that's a debit. But if I'm decreasing my liability, that's also a debit. Okay, because if I have a loan, if I'm looking at the screen, it says loan payable $4,000. So if I decide to make a payment on that of $500, I'm debiting loan payable for $500 because I'm reducing that loan payable. The flip side, I'm paying it from my checking account. So I'm actually crediting my checking account for $500 because I'm reducing the cash because I paid that loan payable. So don't think of a debit is an asset and a credit is a liability. No, it's the normal balance. To increase an asset, you debit it. To increase the liability, you credit it.
So let me ask this clarifying question, because I feel like people are going to be like, okay, I'll never be able to do my own bookkeeping based on this conversation. And that's not really like where we're going.
Right.
I think it was more so like an explanation of what you're going to see and why it works the way it works in terms of the reporting. Right. What you really need to be doing, and correct me if I'm wrong, Greg, is keeping track of every transaction that happens in your business.
Correct.
And then as it relates to where it, and categorizing those transactions. And right. Then you can work with your accountant or your bookkeeping, or if you don't have one, you can put it in the bookkeeping system and it will put it in the proper place.
Right. Yeah. What I want people to understand is if you are keeping track of the cash, it means your bank accounts, credit cards, everything. It's very easy to correct the category it's in.
Right.
80% of it is people not keeping track of the cash. So, I mean, I have clients now where I've still got to go in and try to figure out what they did. I have a client who probably owns 30 rental properties, doesn't do any bookkeeping, even has his parents have a business and he uses their bookkeeper sometimes to record things. And she sent me stuff and I still took me 2 weeks to figure out what the heck she did because he's not keeping track of anything. And I've gone through and tried to do the bookkeeping myself and he doesn't remember. It's like, oh, that was 3 years ago. Like, great. Well, there's this $18,000 that you took out of your bank account. What was that for? Oh, I don't remember. Okay, that's a problem. You want to make sure you're keeping track of all of the transactions because that's the only way to have good records. What you want is you have all of the records of what's happening with the cash for your business. So occasionally, businesses get audited, sometimes just for no reason. And if I can send, and I've worked with people who are here, I'm going to send the person, here's the person that with the IRS that wants to audit you. Here's the printout from their accounting system for all the transactions. And they go, oh, well, you have that. Yes. Let them pick out the individual transactions. Okay, great. Here's the copy of that transaction. And usually they're pretty good. They're pretty easy to work with and they'll leave you alone. If you can't produce those things, it may be a problem. And I've just scratched the surface in terms of QuickBooks and what you're able to do, because I've got clients who have one lady that's a mental health counselor who she just started October of last year and is very computer literate. And if she buys something, she will take a picture of the receipt for what she purchased with their phone and dump it into her QuickBooks app. You can attach it to that record. So if I went and click on an expense, I can click and it'll show me, here's the receipt for what she bought or what she spent the money on. I mean, it doesn't get any more clearer than that when you have that level of detail, which you can do. It's just a question of how detailed you want to get. Ideally, yes, you want to make sure you have all those records there so you know exactly what happened. You can even just put a description if you're just creating a journal entry. Here's exactly what I did for this transaction. Great. But that's is helpful for being able to make sure you have good records when it comes to dealing with taxes, or even just I've got one client who has outside investors in his business. Well, it's important that he keep track of everything so he can create reports for his investors so they can see exactly what's going on with the business that they just invested in. They're not involved in operation of the business.
Another question is there a way to track mileage expense in QuickBooks, or is this a totally different tax time thing?
Well, it really depends on the type of structure you have. in terms of how you want to do that. There is a mileage. If you look down here, there's actually a mileage tool here that you can use. Where that QuickBooks has, depending on how your business operates. The person I just mentioned, the mental health counselor. Yeah, she's really good at doing that. She, every month, because what I've done with her, she set up an LLC. I told her, okay, we can save on taxes if we have it taxed as an S corporation. Pay yourself a reasonable salary. So we set up payroll. She keeps track of any mileage she has for business. And every month, because it's you and the business are separate, and it's treated because she's having it taxed as an S corporation, every month she generates, here's a report, the business reimburses her for her mileage. Again, this is her personal mileage. The business reimburses her. The business gets to deduct the expense. Personally, that's not income to you because you're just being reimbursed for using your vehicle.
Mm-hmm.
Same thing for, she operates from home most of the time. So she has a home office. So she says, great, this space is my home office for this business. So the business pays her for using her home as an office every month. Here's the expenses. This is the percentage. So same thing, it reimburses her for using her home as the office space in her home. Yeah, business deducts it for her. That's not income. As a business owner, I can do things like I can set up a retirement account. That's what I had her do. She has a SEP IRA. SEP IRA allows her to, for the business to contribute 25% of her payroll into a retirement account for her. Yeah, it's a business expense, not income for her until she takes the money out of the IRA in retirement.
Okay. We don't have any other questions. Did you have more that you were planning? Oh, wait, of course, as soon as I said that, that happens all the time. Does that kind of thing work for LLCs or sole proprietor or just corporation?
Well, no, you can, if, again, her business is an LLC. An LLC, you can either keep it as just a straight LLC. And understand, the IRS, basically, if you set up an LLC, what the IRS says is that doesn't exist.
Right.
There are no LLC tax returns or forms for the IRS. Okay, so if you as a single person sets up an LLC and you go and get a tax ID number from the IRS, you go, nope, single person, one single member LLC, you're going to get a letter from the IRS that says, okay, great. For tax purposes, that's considered, the IRS calls it a disregarded entity. So the IRS ignores your LLC. It's reported on a Schedule C on your personal tax return. Okay. So you're just as if you had a sole proprietorship. It's a, disregarded for tax purposes. But yes, you can still set up, if my LLC generated $20,000 in profit for the year, I could take 25% of that profit, put it into a SEP IRA, and take a business deduction for that. Yes. If I choose, what I had her do is have the LLC for tax purposes treated as an S corporation and set up payroll. The advantage of doing that depends on the business and what you're really doing. The benefit for her is she sets up payroll. She says, pays herself payroll. as long as she pays herself what's deemed by the IRS to be a reasonable salary based on the industry that she's in. If you're paying yourself a reasonable salary, any profit from the business is not subject to self-employment tax. If I just have a sole proprietorship or just an LLC and I'm not paying myself payroll, but I have 20,000 of profit, I'm paying income tax and self-employment tax on that profit. So the self-employment tax is 15.3%. What that is the Social Security and Medicare tax. So if I made 20,000 of profit, I'm paying that regular income tax and self-employment tax on that. And using an S corp and paying herself a reasonable salary, so she pays the salary, and if she has 30,000 of profit after paying the salary, that 30,000 of profit is just that for her. It's a flow through of profit to her personal tax return, but it's not subject to the 15.3% self-employment tax because she's paying herself a reasonable salary.
We have two more questions.
Okay.
First question is, I have an equipment rental business for 6+ years, mostly all invoices. Last year, we opened an indoor center and have a POS system combined with advanced booking. Should these two operations be separate entities as far as accounting is concerned? And then there's a follow-up question after you answer that.
Okay. No, if it's the same business, the same ownership, it's all about ownership. If I have a business, it doesn't matter if the business opens a physical location or 10 locations, or if I'm working from my home sending out invoices, it's still that business. So that's one, one account, one QuickBooks, subscription for that business. Now it's just a matter of how you're keeping track of all those transactions, because your POS system should flow into QuickBooks as well as the invoices you're generating.
And then the second, sorry, I was trying to click on, sorry, I was trying to click on this link to get it. It started playing. And then the follow-up question is, are you taking new clients?
Yeah, absolutely.
Okay, and then, actually, I'm going to ask a follow-up question to that question. So in QuickBooks, could you, and maybe that's possibly different iterations of QuickBooks. So let's say, for example, you wanted to do something where you have cost centers associated with different parts of your business. So let's say, like for his business, where he might want to keep the outdoor equipment rental separate from the indoor space to be able to show how this piece of business is doing versus that piece of business.
Right.
You can do that, correct?
Yeah, absolutely.
Okay.
Yeah, you're just setting up different, you can have different locations, you can have different, there's location codes, there's different, I guess, profit centers, or there are ways to track different classes or categories within QuickBooks. So, so if I had a business that had 4 different stores, I can keep track of each store separately, but also give me a combined report for that business. Yes.
And then the next question is about the mileage app. Does it put the miles automatically in QuickBooks categories?
No, this is for helping you keep track of the miles. It's not going to do it automatically because it will depend on how you're set up. It allows you to, I think they did add a way to, maybe reimburse, treat you as a vendor and basically reimburse you for it. But it really depends on how your business is set up, how you want to do that. Because yeah, the client I have that does that, yeah, she just basically pays herself. She uses the mileage tracker every month. Okay, great, I had this number of miles. She basically generates the invoice and pays herself for that. So you probably don't, I would say you probably don't want to do it automatically. You want to maintain some kind of control over that.
Okay. Yeah, because they might change.
Right, absolutely. The other thing that I didn't get to, we went to reports and we only looked at the balance sheet to see which is where your business is at a certain point in time. The other important report you want to see is your profit and loss statement, which shows you what's happened for a period of time. Like this is a profit and loss statement from January 1 through today for this business. So you have, this is what most people, when you're looking at your business and how your business is doing, this is the report that you're looking at. So they have income. Here's the income that the business has generated. So, and you're comparing that. So this gives you total income here of $12,700.77. And then you have your expenses are down below. Everything that you've spent money on is down here below. It tells you what you've paid out and then what your profit is.
And one of the reasons why you want to look at this is because you want to be able to say, oh my gosh, I have spent so much money on equipment repairs. I spent, $750 on equipment repairs in the last 5 months. Why?
Right.
And do I need to possibly update my equipment? It really help you understand, like I feel like the leaks in your expenses and where you might want to change some things.
Absolutely.
And it could be, okay, maybe I contract with a repair guy, or maybe if I'm looking at this particular one, maybe I might want to contract with a repair guy, or maybe I'm spending more on materials than I actually thought I was, and I might need to increase my prices.
Right. Absolutely. Yeah, it's all about allowing you to maintain control and be able to see what's happening with your business.
Yep.
All right. That is really all I have for today, because we've gone over most of the information. We've talked about the banking part of it, because again, that's one of the keys to see what's happening with your the money in your business, so you can keep track of that. Yeah, we don't need to do that.
So I have another follow. It's not a question, but it's in the chat. So Gail, who also works for me, she's the person who keeps me from killing your uncle. And she's probably over there laughing as I said that. So she says she likes how you can open the amount and see what's creating the number right from the report. Can you show them that part? So I think that's
absolutely
on the P&L. That's one of my favorite things too. Because sometimes if you put something in wrong, you're like, this is not right. You can see what the details.
Yep, absolutely. So, that's another, I agree. I do love that feature about QuickBooks, is that I can go in and say, okay, here you said, okay, equipment repairs. So I can go say, okay, $755. If I click on that, it's going to give me the detail of what makes up that transaction.
Mm-hmm.
So I can see, oh, this is what that was. Oh, that's how I got to that amount. Because yes, you certainly do need to do that. And as the accountant, I want to know what makes up all those entries as well. Okay, if I go over here to insurance, okay, what is in the insurance number? Oh, okay, great. That is to this insurance agency. Okay, great. So that's definitely insurance. Whereas I've got lots of clients where I go into a category and go, that's not right. That's not what that is for. So it allows me to go in and make corrections based on the detail for each category. I click on gas and electric. Okay, great. I pay, PG&E. Okay, great. That looks like electric to me. Okay, great.
So go ahead.
Nope, go ahead.
Okay, so next question is QuickBooks Online versus desktop version, which is, I think, a great question because they are not the same.
No, not at all. Some people are used to using the desktop version. The functionality is different. It really depends on what your business is doing. I have two clients that have the desktop version. One gentleman has several different entities, and that's the reason he just has a desktop version he uses for the different. His wife has an interior design business. He has a private foundation, profit foundation, and a couple of other businesses. Doesn't really do much with them, but it's simpler for him to just, I bought QuickBooks and I don't need to pay any expenses at all because I've got a version. I'm sure a few years old, and I just use it to have the few transactions, and he sends me the file every year that I just pull up the reports for that. Versus someone that is using it on a regular basis, that they're using it to operate their business, you probably need the online version because it's a lot more interactive. If you have someone that an accountant that you want them to be able to go in and see what's going on. If you have the desktop version, that's on your desktop. So you're responsible for that file. If it gets corrupted, your computer gets stolen, it's hacked or something, you can lose your information. The online version, it's a monthly fee to have the online version, but it's not stored by you. It's stored by Intuit on their server. So you can access it from anywhere. There's no updates to it that you have to pay for. It's just a monthly fee to have it. If you decide, if you close down your business, you don't need it anymore, great, stop paying for it.
I think the biggest benefit is that your accountant can access it.
Right, exactly. If you have the desktop, the one, if they have to send me a file for me to look at what's going on versus, yes, the online version, your accountant has access to it and can go in and do bookkeeping. It's all real time. So it's a lot easier from the bookkeeping standpoint.
And then when they send you a file, can you make changes and send the file back?
Yeah, that's a hassle because they have to create, if you're using the desktop version, you have to create an accountant's copy. So what that means is, for instance, if someone says, okay, great, I want you to do the bookkeeping for the first quarter of 2022. So great, that's through March 31st. So they create an accountant's copy. The date is 3/31/22. Their system will not allow them to make adjustments to make journal entries prior to that date. I can't make journal entries after that date. All I can do is go in and do the bookkeeping for that period and send it back. It will incorporate my changes into their system, and then it unlocks it so that they can then do things. So it's a hassle. I mean, it's doable if you want to do that, but it's just more of a hassle. Lots of people complain about that because you don't want, if your accountant is making adjustments for the first quarter, of course, it's not going to let you make other adjustments because then it just screws it all up. So, but yes, it's possible to do it. It's just a pain.
Yep. What about other accounting systems? Like, have you used or do you recommend? I know FreshBooks is a good alternative that I've heard of. I've not used FreshBooks, but I've not heard anything bad about it. Or Wave apps.
Yeah, well, Wave, I have someone that was using, actually the person who owns all the real estate, his parents' account was using Wave, so she had set up in Wave, and I went in and I was like, oh, I hate this. This is, but this is mainly because I wasn't used to using it, and none of the, it was none of the beginning information was plugged in. It was just like she was just plugging in transactions to generate a profit or loss. Like, but that you can't do that without doing the balance sheet account so you can balance and reconcile everything. Like, no, it didn't make any sense. She ended up doing double work because she ended up having to go back and put it in QuickBooks anyway. So, like, that made no sense. But I mean, it's whatever you're comfortable with. I think that one was cheaper or something, so she liked using it, but yeah, it ended up not being what was going to work.
Okay. Anybody else have any other questions for Greg? I was going to say, the silly me was about to show up, be like, aren't I your favorite cousin? Like, I think that's a valid question. But anyway, I already know the answer to that. All right, I do not have any other questions. So I think I'm going to shoot the breeze for a minute, because usually what happens when we're in a webinar, and I've not hosted a webinar with these guys before, but I've hosted webinars elsewhere, is that as soon as I say, okay, yes, we're done, somebody types a question.
Right. So
just in case somebody is typing, I will wait a few minutes before we sign out. Oh, if somebody wants to contact you to possibly become a client, how should they contact you?
Let's see here. Let me give you the, let me go over here to chat, because I'll give you my info. Oops. My cell number, which is the easiest to reach me. I'll give you my.
Oh, wait a minute. You just sent that to host and panelists, but.
Oh, sorry.
That's okay.
Everyone. Okay. People will.
Don't forget this. Wait a minute. Paula shared the. Okay, one of you needs to. Oh, thank you. All right.
I'm sorry. I was getting ready to, and then I saw that he was correcting it, so I stopped.
Okay.
My apologies.
Okay. Oh. All right. Well, I didn't see any questions pop in. Thank you, Paula, for always helping out. I didn't see any questions pop in, so I don't think we have any additional questions. So thank you very much. I owe you a steak dinner.
Okay.
Of course, you owe me. Was it the crab boil that you? Yeah,
probably yes. Yes, definitely.
Yep. So all right. Well, I hope everyone got some good. Oh, see, somebody typed in the Q&A. Can QuickBooks handle sophisticated things like profit sharing tracking?
Yeah, there's nothing wrong with that. Yeah, because it's really what you're talking about is just a calculation and a journal entry. So yeah,
So you might have to do the calculation offline and then
Right.
put in the amount.
Correct. Right. I mean, it really should be based on, if we're generating a profit and loss statement for the year. So the profit for the year was $20,000. And if you get, a share of profits, you're just recording that as a journal entry or however you want to record it, what that amount is. Yep.
Okay. Yeah, and if it's a percentage of the $20,000, then it's like, okay, this person got this much, this person got this much, so on and so forth.
Correct.
Okay. All right. Last call for questions. Because I knew that was going to happen. I'm like, okay, I stopped the breeze long enough, and I thought we were done. But see, somebody thought of something.
Right.
Oh wait, so this is what we're gonna do. We're gonna wait till right at 12, to make sure that there are no more questions. How much do you charge for a consultation?
Actually, I will give you guys a free consultation, because it's really about making sure that you kind of get a good feel for what your business needs. Because I always do that for people, is seeing, I want to make sure if you're looking to be one of my clients, I want to make sure I understand exactly what you need and it's a good fit for us, because sometimes it's not. I've had people where this was not a good fit at all. Great, no problem. But making sure that you understand, here's what I do, here's what sort of my requirements are, because a couple of the clients I've had to twist their arm and say, no, if you're going to stay a client of mine, you have to, at a minimum, have these things updated quarterly, because what some of my older clients got the habit of, just at the end of the year when it's time to do taxes, here, let me send you all this stuff. And no, that does not work. You've got to make sure these records are updated regularly so that when it's tax time, it's not a big hassle. So, that's, for me, one of the biggest issues, is making sure we're on the same page with what your needs are, what I'm doing, making sure that's a good fit. So
since you did offer everybody a free consultation, then I'm going to ask a follow-up question that I was going to text you, which is, so the person who keeps me from killing your uncle, if Gail has a QuickBooks related question, and Gail has an extensive background, she was once the city comptroller, but QuickBooks is not always intuitive, depending on what you're trying to do.
Right.
If she has a QuickBooks related question, can she call you?
Of course.
I already knew the answer, but I just want to make Gail happy.
Yeah. Yeah. That's funny. Of course. No problem, Gail. You can call me. Yep.
So, all right. Well, it is now noon. So thank you very much, cuz, for doing this, for being the accountant extraordinaire, my second go-to person. Even though really I'd rather you be the first go-to person, but
right.
We know the dynamic.
Does he even use QuickBooks?
No. So we started using QuickBooks for my business, and when I first started the business, and I was like, okay, I want to start everything on the right foot, and I want to put stuff in QuickBooks, and I'm like, I don't know what I'm doing, and there were all these categories, and I'm like, I don't know how to categorize this, and so I was just making everything ask your accountant, and I'm like, Daddy, we need to talk, and he was putting me off. So then we struggled with QuickBooks, just trying to figure out what to do, because you got to remember, in his job, he didn't need to.
Right. Absolutely.
He was the person who was reviewing records after the fact. He's the guy to show up when the IRS calls.
Absolutely. It was funny. I have a story like that too, because I have a friend of mine who's an attorney who actually used to work for the IRS. And I have a client who I've known her for a long time, but she would always go to him for her tax stuff. And she called me one day. She was, okay, Greg, I need to stop going to see him because I need you to help me with my taxes. And why? Because, well, she starts telling me stuff and she sends me what he had done, and he's old school. He was doing her tax return by hand.
My dad just started doing tax returns electronically, probably like, I don't know, 2 years ago.
Mhm.
He's still very much doing by hand. First of all, he don't trust computers. I'm like, you do not trust your fat fingers,
Right.
but whatever. So yeah, you know he's old school. He shows up with his ledger sheet, and he still will like pull out a ledger sheet, even though it's right here.
Right.
So
Exactly.
yep. So yeah, you know, I mean, he's 72, man.
Right. Yeah. Absolutely. So
But yeah, no, he does enough to get by, but that's why we got Gail. Thank the Lord for Gail.
right.
And I keep Gail happy, which is why I was like, yeah, if she got a question, we're gonna call you.
No problem.
All right. I appreciate you
Yep.
very, very much.
Yep, you're welcome. All right. Take care, everybody. Thanks for
All right.
joining us. I'll be looking for your call, Gail.
Tell you already have his number.
Right. The 10 rights. Yep.
You've already called Greg. So
Absolutely. That's too funny.
yep. So all right, we'll talk.
Okay.
All right.
All right.
Bye-bye.
Take care.